Hello, everyone, and welcome back to the Traders Mind Chat live show. Today, we are talking about secrets to surviving choppy markets. The market has been super choppy as of late. In fact, well, I'm just going to share my screen right away. We will get into a lot here, but if you're looking at this, this is my list of supposed true market leaders, right? Like the stocks that really led on the way up, and there's some pretty heavy hitting names on here, right? Like Asan. Looking at this, from down here when it initially broke out, well, 300% move plus. DigitalOcean, very similar, right? Let's see, from the point of breakout to the high, about a 200% move. Gigantic moves in these stocks, these true market leaders, and you could see that like they've been breaking down. Some of them are experiencing chop. You take a look at the indices; they're choppy as well. And we'll go through all this. I'll break down all the different indicators and markings and all this stuff. It's going to make a lot of sense to you by the time we're all done. But I just really want to in this live stream. The keys that I want to give you are going to help you to survive choppy markets like this, to be able to detect choppy markets like this early, when to start scaling up, when to start scaling down. And one of the biggest things to talk about too is handling FOMO, that fear of missing out. And honestly, like that's the thing that tends to get people chopped up the most, is that fear of missing out. You see market like the one that we're in right now, and it's the seeing it start to rally. Well, the indexes are up. It's one of those things that people think that the market is going to take off. It doesn't. It moves the other way. They get chopped up on the downside. Then other people are thinking that, oh, we're starting to roll over, let's get short, and then it doesn't fall quite as fast, and people lose on the other side. So we're going to talk about how to handle that FOMO for you not to get caught up in that mess. Now, before we jump into that, take a moment, type into the chat. Let me know where you're watching this from. Let me know everything, really. Let me know where you're watching it from. Let me know any questions that you have as we're going. Let me know, well, what's the most important things that you're looking to get out of this. Well, what are you struggling with? And as we have questions, keep firing them into the chat. This is your time. I want you to get the most value as you possibly can out of this. So let's jump in. How to detect market chop before you're getting chopped, right? So let me go back over here and share my screen. Right. So how do we avoid this choppiness, right? Why don't I zoom in on just the S&P 500 right now? Let me know that you are able to see this okay. We're marching up right along here, and then you get caught in this very choppy whipsaw action, and you're the S&P right now, right? Like it hasn't dropped that far, right? Like from the high, it's only 2% off the high, right? It doesn't feel like, just looking at the indexes, it doesn't seem like it should be that choppy. But then when you go and you look at those major leaders that we spoke about earlier, right? Like your Suns and your DigitalOceans, your Cloudflares, all of these, you could see like just how choppy the market has been. So bring this back to the S&P. How do you detect this kind of stuff early? It's a great question to ask. It's one of the reasons why I've been doing this method here for years, like over a decade at this point. I've been trading for over 20 years. Struggled for a while. Eventually found out how to do what I'm showing you on this spreadsheet, and it's been a lifesaver. In fact, I'm largely out of the market. Like, let me see over here. About Oh, what date is that? That is November 23rd. November 23rd, largely out of the market, tested the waters a little bit uh, to start the week off and exited right away. So basically, missing this whole drawdown right in here, right? So, how can you do that? Well, first thing, right? First thing, you need to understand which way the market is moving. Is the market moving up, down, or sideways? Spoke about that a lot in other live streams, but that's really the first thing that you want to start to think about. Which way is the market moving? Not just on the daily time frame, right? Like so many of us are dialed into these daily time frames, and if you're using the major indexes, that's great. Well, when I started off, right? When I really started to get serious about the market and I was reading Investors Business Daily every day, fantastic newspaper, great place to start. But I was looking at just the Nasdaq and the S&P 500. Every once in a while, I'd look at the NYSE. It turns out that it's not quite enough, right? Like if you're just looking at these two here, right? You're looking at the S&P 500, right? So let's make that nice and big again, right? And it looks like it's moving sideways, and it was only 2% off of its all-time high. And then you're looking at the Nasdaq. Let me turn off all those annotations for a moment, and it's like, okay, you're a bit further off the high, right? Like right now, you're about 6% off the high. Not terrible. It looks like maybe it's getting some support around this moving average over here. Maybe if you look to the left, there's some price structure in this neighborhood that it's getting support at. It's simply not enough to really get a good feel of what's really happening, right? Because if you're just looking at the S&P 500 and the Nasdaq, and let's just say for good measure you throw in the NYSE as well, okay, you're getting a little bit more flavor, but there's more to it, right? Like, well, what about the Russell? Right? And you're looking at the Russell 2000, where so many of, if you are a growth momentum swing trader, like so many of us are that follow that IBD, can slim philosophy in general, right? Like even guys out like that are in the U.S. Investing Championship, like Mark Minervini and like Oliver Cull last year, Leif Sariti, like everybody's trading the same types of momentum, right? Like so many of those stocks tend to show up in the Russell, so that needs to be a part of the analysis. And this is giving you a lot more of the feel of what these true market leaders have been behaving like. Like these stocks are just collapsing ahead of what was being seen in uh, the Nasdaq and the S&P. Right? Like it's more like this. It's good to check out these five, right? So the five major indexes that you want to be keeping track of, right? So the S&P 500, the Nasdaq, the Russell 2000, the New York Stock Exchange, and the Dow. Keep them all on your radar. And the one of the big things that this is going to help you do is to not get all caught up in the minutia of what's being said on social media, what's being said on the news, what's being said in the newspaper, what's being said from anybody else. You're going to be able to look at this and be able to make sound trading decisions and not get caught up in this kind of crazy chop, right? So this is step one, looking at and getting familiar with the major indices, what's happening on them, and also looking at them across time frames. So not just the daily charts that we have up here, but also looking at the weekly and the monthly time frames. That's what I've been tracking in the spreadsheet. Uh, Let me know if this is your first time here. Let me know. Also, let me know if you've seen this a few times. Type it into the chat. Let me know. But well, what we're seeing here too, right? Like, so I'm just tracking which way things are moving. Is it moving up? Is it moving down? Is it moving sideways? And when you start to see these colors change back and forth like that, right? Like, so when it's a stable trend, right? Like the Russell has been in a steady downtrend for a while. Uh, it's colored in black, right? So so I know, like, okay, that's a steady trend. When you start seeing the colors flip flop, like from this kind of mustardy yellow to red, or back to green. It's been a while since we've seen some green, but green as well. When you start to see flip flopping back and forth, that's part of what triggers me to saying, "Oh, we're in a choppy market. Better try to reel some stuff in, like not get too overly aggressive. Maybe scale down some of my position size." Um, all of that. Let's see. Looks like got some comments in here. Let's see. BTO. How do we anticipate choppy markets from one day to another having more of a follow through? Great question. So this first part that we're talking about now, that's part of it, right? So again, the major indices are important, right? Like, because the way that the markets work, and again, this is uh, 20 years of trading, and transitioning from doing this part-time, right? So basically doing what you see right here, doing all of that part-time to now doing it full-time. And it, the process isn't all that different. So you guys, you have full-time jobs, great. You could still do this, and it's going to save you time because you're not going to be busy going and looking for the next story, or waiting for somebody else to tell you what to do. You're going to be able to glance at charts like this and be able to say, like, oh, well, like, I know what kind of market environment we're in, right? And you're going to be able to log the data like this and allow that data to speak to you and be able to make great decisions based on that. So, so anticipating the chap, right? So it's seeing the trends across time frames start to flip flop quite frequently, right? And that's part of what happened, like back here, right? Like we were in a yellow environment for a while, then switched to a green environment with a steady uptrend, like so October, early November. That's where best time of the year for me. I made so much money in that period. Well, like it basically was like almost more than at any point throughout 2021. Kind of crazy. Like at least I would say about 20% just in that specific time period. Um, but then from there, starting to see like how things are starting to change, right? Like, so we're in the steady uptrend, then starting to see is some activity on the major indices. Okay, but then it's not just like what's happening on the indices; it's then going into and looking at uh, distribution days. It's looking at the number of stocks making new highs versus new lows. All stuff that we've spoken about on other live streams, things that we talk about all the time inside the elite program, and we're basically doing this exercise and filling out this stuff together every single day, so that it's really getting into everybody's heads on how to do it and how to do it right. But the thing here that you start to see, number of stocks making new highs versus new lows, right? Like this column and this column, and it's also plotted over here. All right, so let me put that to the side. So this indicator down here, it's just the number of stocks making new highs versus new lows on the Nasdaq, right? So you could see that when it's moving up, there's more new highs. When it's moving down, there's more new lows. And if you roll your mouse over each one, it's telling you the count, right? Like, so today, right? 271 stocks making new lows and only 17 stocks making new highs. Kind of hard for the index to make new highs when more stocks are making new lows, right? Like triple digit new lows and low double digits making new highs, right? Like it doesn't make a whole lot of sense that uh, the market's going to take off. Same thing over here with the number of stocks making new highs versus new lows over on the NYSE. So what I like to do is to track it here on the spreadsheet. So I'm just filling in each day, and I could see how things start to transition. And it makes it easier too to be able to go back and look at data and compare different time periods. So that's something else to another powerful thing for doing this kind of an exercise. But it's in seeing that transition that starts to clue you into like, okay, the starting to get a little bit choppy. Maybe I should start to scale down. Maybe I should start to think about selling some more into strength, right? We do want to have good selling habits for our trades, good trade management habits for all of our trades. A little bit of a separate discussion, but it's good to mention it here too, that selling into strength incrementally along the way, that's a good idea. Um, when the market begins to change in a major way, to have that to be a sell signal for us too, right? Lock down more before the market starts to really get choppy or starts to roll over. All great trade management habits. And then, right, like these columns over here, the trade grades focus list in the neighborhood, like start to see how many trade ideas are you coming up with. You're never going to trade every single idea that you come up with, right? Because there's just going to be too many. My universe list, the stocks that I want to trade, right? Like, so I'm not interested in all 10,000 stocks in the market. I'm only interested in about 350 to about 400 stocks that fit my specific criteria. Of those back here in October, November, I was seeing 60, 70 potential setups. And uh, the win rate, you see that column right there, that's telling me how many for the week were in profits. So that's telling me that, hey, if I just threw a dart, I would have a 70% chance of hitting it. That's the type of market where I want to start being aggressive in. When I'm looking at the trade ideas list and there's fewer and fewer and fewer stocks on it, and when there's fewer and fewer of those trades working, it makes it a lot harder to close your eyes, throw a dart, and to actually hit a winner, right? So it's those things that are telling me about, is this a good environment? Is this a not so good environment? So it's really those kinds of reps. Again, this is all stuff that I was doing while I was trading part time, and I'm still doing now for the past 3.5, 4 years as I transitioned to full time. Right, trading for over 20 years, doing this. It's it, you you find a flow, you get dialed in, like the information speaks to you, and you know what, like this is the stuff that we're doing that I'm teaching all day inside our elite program. BTO question. Have you ever went from being green to then giving back profits due to market conditions? If so, how did you overcome that? Yeah, that's a great question. And the answer is of course. Right? Like that's something that we've all experienced. Like everybody that's ever traded has experienced that at some point in their trading. And well, part of what happens as we gain more and more and more experience, well, it's not that we never have another drawdown ever. It's that we learn how to manage those drawdowns. So great segue into the next topic is when to start scaling down to avoid those drawdowns and when to start scaling back up so that way you could have bigger profits. So it speaks to this whole thing right up here. In fact, well, why don't I make this even bigger? Right, let's see, is that big enough, or should we make it even bigger? Let me, yeah, you guys should be able to see that. Let me know if you could see that okay. All right, so We have these different conditions, right? So I use this whole traffic system for my trading and for scaling down when things are getting choppy like it's been, and scaling back up when things start to be working and working well, and I've got the green light. So red environment, right? Let's start with that. That's where we're at right now. So if I have open trades and less than half of them are profitable, then I want to be scaling down. I want to be trading my smalls. Then the reason why is because the first trades that I put on have not proven themselves yet, right? So it kind of makes sense. Like, wait until you start to gain traction to start to put more money at work. In fact, think of it like this. Think of it like you ever eh, you ever get stuck in the mud, right? Or can you picture getting stuck in the mud like you're driving your car and you get stuck in the mud, right? What happens? Or maybe you've seen a movie like this, right? Like people like they'll step on the gas, like try to get out of it, and what happens? Like they just spin their wheels real quick, and mud gets everywhere. It's a huge mess. What happens if you go the other way and you don't press on the gas hard enough, right? Like you're still not going anywhere. So what you need is this fine tuning of pressing on it just enough to where you start to gain traction, and then when you start to gain traction, then you could start to press a little heavier. Same thing applies here uh, with trading, right? So that's what that part is. Looking at the trade ideas list. If the trade ideas list, right? Like, so again, that throwing a dart analogy. If I have less than a 39% chance of throwing a dart and hitting a winner, then I want to be scaling down. Um, Looking at past history, right? If three trades or less of the last 10 trades I've taken have been positive, then that's also a sign to start scaling down. Looking at the quality of the setups, right? So, well, we touched on it a little bit, but not quite. So let's go into it a little bit deeper. So here, I'll show you my list. Here's a focus list from last night. There were only a couple of B level setups, and mostly C. Didn't I didn't want to take any of these. None of them were good enough. But here's a few. Like this one at the time seemed like a B level setup. There were a couple of flaws in here, but it seemed like maybe it was getting support around the 21 EMA. Something that I didn't quite like was that the moving averages right over here, they were curved down instead of being curved up. That was a flaw, but no, it's still a setup, right? Like I didn't want to just toss the idea. It's there, but it wasn't good enough for me to put any money behind. So it just allowing it to live on the list. Um, yeah, that trade obviously didn't work. It fell below the where I would have had my stop loss. But it saying all that, right? Like it's good to keep track of the all of your trade ideas, the quality of those trade ideas, and how the market treats them, right? So let's say, how about this? Let's say that there's all these C-level setups, right? So none of them are really that great, right? Like there's major flaws in each of these potential ideas. And so you're going through this, and uh, what if they all start taking off? Right. Well, what if all these ideas start taking off? Well, that's the market giving you information about how it's treating setups and how it's treating even the poor setups. Great. So then you come back the next day and do your screening process. You find more setups and you start to see, like, well, what are the quality of these? How does the market treat these? And in seeing that, that's how you're going to start to see all these different trends emerge. Again, it might sound like a lot, right? But this is something that's going to last you for the rest of your life. And it's something where it gets easier with the more that you do it, right? Started doing this part time a long time ago, right? Like more than 10 years ago. doing it with a day job, doing it with a growing family, doing it with running another business too, right? And still doing all this kind of trading and everything like it, you can absolutely do this stuff, and it's easier than having to rely on somebody else for information, to having to pour through 10Ks and all the other kinds of accounting data, right? Like looking at the trust, glancing at this kind of stuff, like it the whole process about half an hour, right? A day, sometimes even less than that. So that's how I'm avoiding the big drawdowns. Like I'm waiting for something. When the market starts to get choppy like this, I'll start to scale back. When the market starts to ramp up and I'm gaining traction, that's when I'm stepping on the gas, right? So it's almost like if you were to drive a sports car, right? And you have your sports car and it's a bright sunny day, you've got a straightaway. Great, like those are ideal conditions. Step on the gas and go. But if it's raining or snowing out, like that's not the time to take that sports car out and try to slam on the gas. Right? Like it's time to take it easy. Maybe take the SUV, right? Or maybe stay home. Maybe don't go out. Right? Like that's what all of this is helping us do, and what that kind of analysis could help you do it if you put in the time and effort to do it. And it's not that much work for you to do. It's just the learning curve, right? Like you could do all this yourself. It's the learning curve to get over. You absolutely can do it. If somebody like me can learn how to do this stuff, like there's no reason why anybody else can't either. And that's what the whole elite program that we have is about, to help you be able to do this kind of stuff that much faster. But let's talk about FOMO and handling FOMO, and FOMO as being really one of the biggest reasons why people get chopped up in these kinds of market environments. It's tough. It really is. Um, the reason why markets like this tend to lead to so much fear of missing out is because of the bifurcation of it, right? Uh, let's share the screen again. And, like, well, when you have your major indices still like so close to all-time highs, where you're looking at this and it's like, oh, like here comes some distribution days, right? Like for those of you that are familiar with distribution, right? Like I've got a script here that's automatically flagging distribution days, and you start to see that piling up and you read something that maybe somebody posts on Twitter, or you're reading it in a newspaper, like, oh, the distribution days are piling up. Now the market's getting ready to roll over. It's time to correct. Well, there's more to it than that, right? Like there's reasons for the market to roll over, sure, but there's also reasons why maybe the trend continues, right? Like maybe somebody steps in and buys it. It's when you start to see both sides of the coin, right? Like, yes, there's distribution over here. Start to ask yourself, if I'm selling, what are some of the reasons why somebody else might be buying? And well, what kind of reasons do you see here that somebody might be buying? Go ahead, type it into the chat. Yeah, well, I'll check out some of the other platforms that I'm streaming to over here. We've got Twitter, we've got ShareVision. Shout out to the people over at ShareVision; they're awesome. Um, Yeah. Yeah, it's the 50-day moving average. That's right. Right there. That's a reason why, yeah, somebody might see that and say, oh, it's a 50-day moving average. Why don't we step in and buy that? Sure. And it's those kind of things that lead to this tug of war where people are looking at this, trying to short. Great, they short. Maybe it works for a couple of days, and then what you're starting to get some choppiness right in there. Maybe it continues to the downside. Maybe it doesn't. Is it the ideal time to be shorting, or is it the ideal time to be stepping away, right, and protecting capital? Right? Like you want And right, and credit to Mark for coming up, Mark Minervini for coming up with this. Now, yeah, I'm not sure if he came up with it, but I've heard him mention this many times before. An easy dollar market versus a hard penny market. This is a hard penny, right? Because you maybe you're rolling over, maybe you catch support like it did yesterday and today, right? That's more of the hard penny kind of environment versus something that's nice and smooth. This is an easy dollar environment. That's what we want. We don't want this mess, right? And even in there, like so many people getting ready to short, like that's not a time to short. The reason why is because there's so many other layers of potential support in there where it price could rally in your face, like right here, right? Like you got short on that day, great, like that's great for a day trade, but it's rallying right in your face too. Like that leads to like it tends to be a lot more trouble than it's worth, especially for those of us that are trading part time. That uh, like it's you want the easy dollar environments. That's what all this kind of work is going to help you with. Um, Another thing too, right? So much of fear, right? So much of emotion has to do with our beliefs, right? Like what we the emotions that we feel are based on our beliefs. The actions that we take are based off of uh, beliefs and emotion. So if you are feeling fear, there's some kind of a belief that's attached to that. So we need to question, well, what is that belief? Oh, well, I fear that I'm going to miss out on a trading opportunity. If you have another core belief, and this is one of my core trading beliefs, perhaps you've heard me say before, the market is an infinite stream of opportunity. This is something that I write down every single morning before I start trading, right? So the market is an infinite stream of opportunity. I beat that into my head every single morning, and it reminds me that there's no reason to jump the gun. There's no reason to take a subpar trade. Why? Because the market is an infinite stream of opportunity. Wait for your edge to present itself. Whatever that happens to be, wait for the ideal opportunity to present itself. You don't have to play every hand. Just play the ones that you have the best opportunity, the best probability, the best profitability on. Trade those and you're good. Question from BTO. In these conditions, how much of an impact do you think catalysts, either positive or negative, impact stocks versus impact the market has on stocks? Another great question. So, well, let me share the screen again. Right. So, sharing the screen. Well, what do you see? Well, what do you see? You see a bunch of price action bars. Right. You see a few moving averages. You see some volume. Let's pretend that you didn't know that this was the S&P. That's all you see. Um, would you know what was causing any of this kind of stuff? No, right? Well, would you be questioning, well, what was the cause? Oh, maybe. But the thing about it, though, is that there's really only uh, supply and demand that causes price action to move, right? Like, oh, why did price move? Right? Like, well, there's more buyers than sellers at any given time, right? And that's really what we're looking at to measure this kind of stuff. So I'm not saying that those kind of catalysts don't matter at all, right? Like if we know beforehand that there's something major that tends to be a volatile event, it's good to know, right? Because you could anticipate that, oh, on such and such day, there's likely to be, right? None of us are fortune tellers. You don't need to be a fortune teller to trade well, but on such and such a day, there is such and such event, and typically there's more volatility. Great. So you could anticipate the additional volatility without having to be a fortune teller of thinking that, oh, price is going to move this way, price is going to move that way. No, you could like for the way that I've learned to trade over the past more than 20 years now, you don't need like I don't need any of that stuff. Like I'm trading based off of what I'm seeing in the charts, and everybody else could come up with their explanations of like, oh well, the Fed said this, or the earnings call said that, and so price moved this way. Well, like that's great for them. What matters to me is what's the story that the market is telling. What's the story that the market is telling? The market is telling us a story where price is in an uptrend, price is in a sideways trend, price is in a downtrend. And we could see how things are evolving that way by looking at the market, by watching what people are doing versus listening to what people are saying. And that's been the formula for success for me. That's why I've been able to trade well, been able to trade well enough to where I was able to leave the day job of my own accord and to be doing this and coaching you guys and sitting here and doing live streams and writing books and all this. Great question. Let me know what other questions you guys have. Right. Well, we're up to the open Q&A portion of today's live stream. So far, you guys have been great. Oh yeah, by the way, seriously, like so one of the things that I did today was I finally like hired a marketing team. Right, like instead of trying to do everything myself, I think that that's going to be great for 2022. But yeah, well, like I'm marketing is something that I'm not good at. Anyway, like and subscribe to the live stream if you haven't already. Um, if you are following me on social media, right? Like I'm on all these different spots: Twitter, StockTwits, Instagram. Go check out Michael G. Lamott. Um, if you guys haven't checked out ShareVision yet, I see a bunch of you watching over on ShareVision. Shout out to you guys. Type something into the chat. Let me know that you're alive over there. Yeah, check out ShareVision. And let me know what other questions you guys have. I'm happy to stay on for another couple of minutes. If you do have any other questions, please let me know. If not, we'll call it a day. We covered a lot in today's live stream. Again, talked all about the secrets of surviving choppy markets, right? It really starts with you. It starts with your analysis, and you don't need that much. Right? Like you don't need to be signing up to all kinds of crazy things. You don't need to be dialed into the news. You don't need to be watching the market 24/7, like being on your phone. It's just a matter of observing what is happening, and you'll be able to see like as the market shifts and turns, right? Like everything that we showed you in the spreadsheet here, like how things are happening, how things are evolving. Uh, Again, you could go see it. Uh, this is what we do every single day inside the elite program, the Mara Wealth Elite program. So if you haven't seen that already, go check it out. In fact, here's the website. Type it in and show you guys. This is the elite membership right over here. Go check it out. Marawealth.com/membership, or just go to marawealth.com and click the link up there. It's great. It helps people. We do 4 hours of live group coaching every single week. In fact, we're doing an hour today after the close. So if you sign up today, then come in and join us. Well, we're meeting over on Discord. Myself, all the elite members, and our other coach, Stu Chalmers, who is freaking phenomenal. Did a couple of live streams with him too that are definitely worth checking out. Let's see here. Another question from BTO. Did you ever think of shorting stocks instead of going long due to market conditions? Yeah, absolutely. When the conditions are right, I will short. In fact, one of the best opportunities that I saw over the weekend was in DDS. It was a great short. Shorts tend to be much shorter lived, right? Like, pardon the pun, than going long. Excuse me. But yeah, fantastic bearish wedge right there. Right? It had topped out, started gapping down, had a very weak rally. You could see the weak rally both on based on the price action, that wedging action. That's generally not a good sign. You could see it on the volume drying up. So there's less demand coming in this as it's trying to rally. And then right there's 2R in a day or 2 days, I should say. And now it's still chopping around. So yes, when the opportunity is correct and assessing the opportunities, that's part of what we go. If you want to go deeper on any of this stuff like that, that's what we're teaching inside the Elite program with all the group coaching, with the library of videos and video lessons on everything and all that stuff. Go check out the program. You're going to love it. Let me see. Well, what else? Well, what other questions do we have? What other questions do we have? A lot of great questions from BTO. Anybody else? BTO really broke the ice for everybody. You guys need to be typing in more. But anyhow, yeah, I think if there's no other questions, I'll give you guys just one more moment to get that last minute question in there. So you better start typing fast if you have it. Let's see. Was there one more? It seemed like something flashed. Yeah, no? Alrighty. Then looks like we will wrap things up here. And again, we're doing a full hour of group coaching today, right after the close. Go check out the Elite membership. Check out everything that it has to offer on this page. Check out the testimonials, video testimonials from our members. And I'll see you in there. And yeah, that is it for today. Take care, everybody. Much love, and have a great rest of your day. Bye-bye, everybody. Peace out. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.